We are working to save you money as you plan your back to school financials, and there is a lot to figure out. New clothes, new supplies, and of course paying for those sports. So joining us today is Mike Martinez, founder and president of the Pension Group out of Dublin. Always glad to have you with us with some great advice here, Mike.
Thanks for having me, Angela.
I cannot believe we're already thinking back to school. A lot of people are also looking at their budgets, and you say, you're already frowning. You say right now is a really good time to reset that family budget.
Well, it certainly is. I mean, let's face it, school these days wasn't like when we went to school. You got field trips, you got pay-to-play sports, you got, you name it, we got another expense.
Exactly.
That's unexpected.
So how do I reset that family budget? Walk us through like what items I should really like point out and say, I have to budget for this.
Well, certainly, there was an interesting article in the Wall Street Journal that talked, specifically about, people spending back to school shopping. Obviously, that's what we're really talking about. But, obviously kids need supplies to go to school.
Sure.
Clothing, new clothing. I know when I was a kid, it was always, new clothing. I went to a parochial school, so, it was more of a uniform and
there you go. Yeah.
new sneakers. I always had to dress nice.
Sure.
But everyone's going to be in a different situation. But, with, a lot of the tariffs, a lot of things going on right now, it's really hitting, a lot of the low income earners because, the dollars really aren't there as much anymore.
Yeah, they aren't.
Yeah.
And so what are some expenses that you find a lot of your clients or other families you hear don't plan for, or they didn't expect and suddenly, boom, they're hit with it and they have to pay for it?
Well, I think a couple things, obviously the staples we need, we know about that. Kids, eating lunches
Backpacks,
at school,
things
all
like that,
all those typical things. But, fundraisers, birthday parties, there's always something that's going to come up, especially with, different kids in different districts. They may have to play for sports. Everyone's going to be a little different. So there's always going to be some unexpected expenses. But again, if you start budgeting for some of those things, start setting up a savings account at your local bank or credit union, you can certainly do that and have that payroll deducted to help offset some of those unexpected expenses.
I know some people, Mike, who set up like budgets for the start of school year, and then in January they reset again, then they reset again in the summer because there's always summer play money, right?
True.
I mean, is that a smart thing to do, or should you really plan out for the whole year?
Well, certainly if people get raises and things like that, you can put more towards that. I don't think it's bad to look at it on a quarterly basis instead of just looking at it on an annual basis. I think it's a smart way of approaching that.
Do I work with my kid on this budget? Is this a good teaching moment, or is this a scary moment for them and not yet?
Well, it depends on how much your kid wants to spend.
Exactly.
Mom, that's not enough. That's not enough.
Right.
But in that situation, I think it's good to understand some of the dynamics. Obviously, you may not, the younger the children, you're not going to get into all your budget and things like that with them, but saying, okay, this is what we have allotted. This is what's for activities at school. This may be for sports. This may be for education. This may be for extracurricular things. But understand that they, just as we have to live in a budget, so do our kids.
Certainly, a lot of people are saying, "Ooh, I dipped into my summer savings. So, what do I need to do to get back on track for school?"
Well, obviously, we're always trying to find deals as parents. I remember those days when my kids were young. Now they're all grown and having their own kids. But, creating that back to school budget is important, and some people say, 10, 20, 50, $100. Again, you got to really start planning, for those. So, the last thing you want to do is be putting money on credit cards these days and carrying that balance.
So is now really the time to kind of refuel that savings then if you look at, okay, I do have to buy books, but maybe that, extra t-shirt or sweater is on sale, it's better in my savings account than...
Yeah, sometimes you got to make those tough decisions with the kids.
Thanks, Dad.
Yeah. You're not getting the Jordans,
yeah,
but yeah,
right.
you get what I'm getting
exactly.
at. You get the normal shoes.
Yeah.
But, certainly, people that are, struggling, during these periods of times, obviously setting a budget is extremely, extremely important. I tell people, and kind of adhere to that. And always looking for the deals, the sales, obviously, back to school, we're going to have that tax reprieve, and people are going to be able to save money on taxes. So there's definitely some things here in Ohio that we can do to help minimize the burden to us, all of us.
You advise your clients to have a 3 to 6 month emergency fund, meaning 3 to 6 months of cash on hand, ready to go. That is easier said than done in today's day and age.
Yeah, or maybe harder. I don't know.
Well, yeah, exactly. exactly.
But I mean, it's something that we really stress. Certainly, people put a lot of money in their 401ks, and you should always, if you have a 6% match, do at least 6%. But maybe instead of doing 10, you start taking that extra 2-3% and putting that into savings until you build up a $10, $20, $30,000 emergency fund to really help for those situations that emergency arises. I need a new furnace, or it's back to school for my kids, and It's when you start having multiple kids is when it becomes even a bigger issue, because you're not just taking, I have a twin sister, so it wasn't just me, it was me and my twin sister going to school.
Yeah.
So my parents had, kind of double whammy when it came to back to school.
Couldn't really share clothes with her, right? So
No,
there you go.
no.
What if I don't have the capability to do 3 to 6 months emergency fund? Automatic deductions. I find that helps because it's just money you don't even see. It just goes straight into something else.
Well, just like your 401k at work, it's automatic deduction. So as you get a paycheck, you can set it up with your local bank, your credit union. As you get paid, that money goes straight into your savings account, which I think is extremely helpful. Because if you don't see it, it's put aside, and you're creating that emergency fund today, and so you don't have to worry about it in the future.
Parents are getting those emails saying your tuition's due, your tuition's due. So if you're a parent or grandparent, maybe you're paying it yourself. Like, what's the first step in just tackling this bill?
Well, I think the biggest thing I did with all my children is they had some skin in the game. It wasn't mom and dad paying for everything, regardless if you're married, divorced. Your kids need to understand this isn't a free ride. So one of the greatest tips I had from one of my CPAs many, many years ago is maybe the first year you pay 75, maybe 50, maybe 25, and then the final year your kids are responsible for the full bill. Your kids need to be responsible for things as they're becoming young adults. I would say, they need to set aside a lot of, you need to look at a lot of different things overall.
So how do I decide which accounts then do I use first or have the kid use first?
Well, you can certainly start, setting up 529 plans. I think that's the first way to use it, because we know the income's tax-free. But I think the number one rule I don't want people to break is I don't want you to sacrifice your own retirement. I think a lot of people will tap into, maybe take a loan from their 401k, or maybe they get into a situation where they're drawing down other funds, IRAs, whatnot, to pay for their children's college education, and that can be very, very difficult.
So there's a delicate balance, you're saying?
There is, yeah. And again, I don't want people to jeopardize their retirement.
Sure.
As I always say, your kids now have, I just turned 50 this year, even though I helped my kids, when they went to college, but I did it at the end type of thing. I wanted them to finish college. But, as we get older and older, we don't have maybe 20, 30 more years of working career. They do.
Right.
So, there has to be some amount of either student loans or something of that nature that children need to be held accountable for, that it's not always put on mom and dad.
Like you said, they have to have a little bit of skin in the game, right?
Correct.
Preach
Yep.
it. All right. So you advise your clients to avoid hidden tax surprises. What are those?
Well, certainly 529, any money that's used from a 529 plan is going to be tax-free. I think that is extremely important. But, if you start pulling money out of IRAs, 401ks, if you don't have loan provisions and you're pulling out hardship withdrawals, that could become a taxable event to you. And those are some of the gotcha moments where you may be trying to help out your son or daughter go to school, but then what ends up happening is you end up paying more in taxes because of federal as well as state taxes. And if you're under 59.5, then you got a 10% penalty on top of that. So you need to be very, very careful.
And those percentages add up, for
Correct,
sure.
yes.
Okay, so finally, what's the best way to preserve it so I can retire on time?
Get your kids a scholarship.
Exactly. Get straight A's.
Get straight A's.
Yeah.
And sometimes that's really not enough. But it is a balancing act. I tell people. But having a plan starting much younger when you have kids, a lot of parents typically delay this until maybe they're teenagers. Oh, we really have put this off, and we've been building our careers, and we really haven't thought about what can we do. But even if you're putting $50, $100, $200 extra a month aside for college into a 529 plan, or maybe a non-qualified account where you're not penalized for pulling money out, that could certainly be used. But by all means, don't jeopardize your own retirement to help your kids go to college.
So Mike, let's talk about this. You describe it as feathering the nest of the next generation. What do you mean by that?
Well, feathering the nest, I'm certainly a grandparent, and I've already set up trusts for my kids or for my grandchildren.
For your grandkids.
To help them out with college, because I know my oldest son's wife is finishing medical school out in New Hampshire at Dartmouth. But, it's now taking care of the next generation. So when you have grandparents that are in situations that can help out, there's really different accounts besides just opening a 529 plan. Because, you can certainly be limited on that, and the deduction, you get limited on that. But you can set up an UGMA account, Unified Gift to Minors account, or a Unified Transfers to Minors Act. So there's different things, but you can also set up family trusts, for education. Like for my 3 granddaughters right now, that's really what I've established, is to really help my next help my children out and help their children out, so they don't have to worry about so much the college planning expenses in the future. Because let's face it, college expenses keep going up and up.
They do.
That's not going down.
Do you suggest perhaps also, I see all these ads for high yield accounts, right? And so those, they're not limited to, say, education. So say your child or grandchildren want to do something else and not go to college, but this is still money that you're feathering their nest. Is that a good plan?
Yeah, I mean, you could set up like a a non-qualified account where money's going into the account, and if Susie or Johnny doesn't use the money, then that could be something that could be given them for another career. I know one of my sons, finished at Ohio State University, which was great. My other son decided not to go to college, and he got a roofing company. So he didn't incur all that debt, and he's doing totally fine. So, at the end of the day, you have to look at things. Every child's going to be different. It doesn't mean they have to go to college. Some might want to go to a trade school. And again, that 529 plan, those UPMA accounts, doesn't have to pay for college. It could pay for a trade school. There's a lot of different things those plans can be really designed to help pay for.
And so when you say you've set up trust for your grandkids, this is that generation skipping trust that we hear a lot about?
Correct. And, it can be used for college. It can be used for other things as well. And again, certainly for those that have interest, they can reach out to our team. And again, we have estate planning attorneys. We have specialists that can really help set these things up properly so that, when you're in a situation where you have some wealth or you want to help your children out or grandchildren, we want to do it properly so that it benefits you from a tax perspective, but also helps them out to cover those college expenses.
The bottom line I'm hearing too is get this planning and conversation started now, and earlier is better.
Earlier is better, and I just turned 50, but I had a trust set up when I was 28 years old. Most people don't think about setting up trust when they're 28.
No.
But I've been doing this for 30 years now, being in the financial services industry, owning my own firm, and I really tell people the earlier you plan, the better off you're going to be. Just like I think you said earlier, Mike, I wish I'd known you 10 years earlier.
Yes.
But that's the truth, because a lot of people don't know the right questions to ask or what to go through, but to work with someone that is experienced in not just giving advice, but doing it for themselves and their families and people they know is important as well.
Mike, this is a big one for a lot of college students because 9 months is going to come up fast, and those student loan payments are going to be starting.
Yeah, there's been a lot of changes with the Trump administration. They're no longer letting them put them into, extend them anymore. Under the Biden administration, they want people to start paying back these loans. So a lot of changes have occurred.
So a lot of people are asking, if I have the cash, do I invest it all? Do I try to pay off this debt right away? Do I do a hybrid? What's the answer?
Well, certainly you have to look at what the interest rate is. Just like I have clients that are looking to pay off their mortgage, I say, well, what's your interest rate? If your interest rate is 2-3%, well, if I can't earn 2 to 3%, then fire me as your advisor, right?
Bye-bye.
But some of the student loans might be 5-6%. But again, we don't want to jeopardize someone's retirement because it's usually not the child that's paying for it; it's the parents. And I don't want kids to say, "Mom, Dad, I need $100,000," and that's easy for a child to say. But we don't want that because then we're no longer earning interest on that to help you out from your retirement perspective. So I really stress to parents, be careful, run the numbers, work with an advisor. If you don't have an advisor, certainly give us a call to really calculate what's the best option. And maybe you pay, $5,000 or $10,000 towards, that, to a student loan. And then you
keep
extend
the bulk
the payments.
for investment. Yeah.
And you can send it out over 15, 20, 30-year period. I know my son, his wife's a doctor. She's finishing up Dartmouth University, doing her residency, and there's certain provisions that allow people to extend their loans out for a longer period of time. So that might be an option too for people.
So you got to look for those.
Yeah,
things.
don't always look at it as I'm going to pay it off all right now.
A lot of people use a 529 thinking, okay, that way I don't have to pay and deal with the college debt. But you say that sometimes a 529 doesn't make sense. How so?
Well, when we look at a 529, it's something you're very limited in investment options. I think that's one of the things, I think Ohio, I think they use BlackRock here. We don't really get a lot of clients that invest in 529s because they're very limited as far as structuring growth. There are other ways. You can set up non-qualified accounts where, it doesn't have to be used for school. It can be used for other things as well. So there are some hidden gotcha moments with 529 plans. Be careful about that, and certainly if people have questions, they can certainly reach out to us.
Because with 529s, there's also contribution limits and withdrawal limits too. So there are so many fine prints that you
factors
figure out.
or grandparents. I have 3 granddaughters now, believe it or not. Just turning 50, but you can certainly, grandparents can contribute to 529 plans. There's a lot of other ways to help offset college expenses instead of just putting on the parents. Grandparents can certainly help out with that as well.
Yeah, for sure. Well, Mike Martinez, thank you so much. We appreciate you joining us. Always great information coming from Mike when it comes to your finances. So back to school, get ready.